Welcome to Insights. I'm Eric. Thanks for stopping by this weekend. I hope everyone's having a good start of the weekend and something productive and fun to do. We're going to talk about grain quickly here. I've done some detailed grain reviews lately, so I don't want to make this one too long. I want to talk about really mostly the energy builds that took place this past week as the three time frames in the grain markets are still largely reflective of cost building action. It's neither a decisive focused rally up, and even when the trend is triple up and moving higher, it's mid-cycle, borderline late, and there's just nothing to do in terms of there's really no plays. The three grains, corn, soybeans, and wheat, are all struggling with a weekly trend that's fairly extended in terms of both the price and the time cycles. They're almost three standard deviations, and that's a difficult one to compare with when you have a monthly trend that's relatively extended itself. I mean, it's not statistically, but it's higher than zero, so that it's blue. It's not. It's just a nudge in the ribs saying, hey, this thing's getting a little bit warm, but it's not super hot yet. So I guess the real interesting setup continues to be the DI, and we're going to have to, let me pull up my interactive charts and we're going to take a look at those quickly. And as I think we're going to get corn, let's go to corn first. Corn looks fairly decent here. Oh, that's coffee. I think we have to go a couple more over. Okay, corn's right there, and as it comes up, we can see that the DI and the DI2 both have arrows next to them, so they've gone up from the previous week. I think this was 33 or something of that nature last week, and we popped up. Now, I think the significant part of this is that price relative, this is moves through Tuesday. Price wasn't down all that much. It went down and then it went back up. So it was kind of neutral. And even as price was neutral, the DI rose again. And it's pulling DI2 up. And we can see similar action in soybeans if we get out to soybeans. It should be right here. We have DI and DI2 have gone up. I think this was about 15 last week, and it really jumped. It's at 40 and 20. So soybeans is probably has one of the stronger energy builds because DI2 is the highest at 20. Corn is right behind it. So as we've had relatively neutral action and somewhat even bullish towards the middle part of the week, DIs in corn and beans moved higher. The only one that fell down was wheat, and that was because we've had such a strong rally in wheat. DI fell, but it pulled DI2 up again, and DI2 is still rising. So this downward, almost flag-like pattern represents consolidation. Again, a continuation of cost building. Most of the primary trends are up, and we're going to see, if you can pull up the charts, almost all the participation is low, which is below 20%. It is the low participation that causes really a disinterest in the market, or reflects a disinterest in the market. And that tells us that this market is really stuck in consolidation. It's a transfer from the strong and the weak hands. And these numbers, I think even for corn, it's almost zero. And we'll take a look when we head back to the matrix here and see them specifically. Yeah, corn, WA is 13. It's soybeans, that's almost zero at 4. And wheat is 8. They're all highlighted green because they're just so low. And that reflects a market that's moving. It's jumping up and down in a sawtooth pattern, or maybe even grinding a little bit lower. But there's no one there participating inside this trend. It's exiting. Volume is, it's not really volume. It's just the number of contracts that are being open or closed, and it's dropping. Some of that has to do with the function of how producers hedge their crops, I'm sure. But again, the market sees through comparable time frames of the previous year. So it's kind of like seasonal trends and the statistical techniques. If you have a seasonal tendency that exists during this time frame, it's comparing it based on the past and other previous pasts that are also in that time frame. So it is something that it's adjusting for, and it's just telling us that participation is relatively low. And we have low participation, and we have a highly compressed market in two of them, and wheat's probably not too far behind. So this is classic cause building activity. Cause building within now as we head into August and September. We're still within the slow period. I know people are suggesting that both corn and soybeans are not going to take out their high. They're probably not going to do it through this time frame. Wheat tends to do better, and that's the area which we will look for the best performance. But the energy builds reflect, if this continues higher and these get it pulled up to 20, 30, 40 DI2, that's too much energy available on the bull side to say, and to really say in definitive terms that the grain complex, corn and soybeans, cannot make new highs. I think that I've kept a couple of the comments that I've seen on the internet, people that have boldly stated that we're not going to make new highs. I just bookmarked them. I mean, we'll revisit that. But the energy, bullish energy concentration, it makes that statement could be easily proved to be a false assumption. And as long as these energy builds keep going, and we'll keep an eye on these in the coming weeks here. Each one of them here in August is going to be quite important. So let's keep that in mind. I think when they start to get significant and we get a signal that's significant here, I will do a restricted content review. I'm going to keep this one open today to let everyone go over the ideas that we're taking, that's going through what it's like to move through the evolution of the trade. The evolution of the trade follows the 3-time frame. We're following the primary trend. The primary trend's been up for 9 and 11 months and has produced these types of returns in these ETNs, which is our representation of the continuous contract. Everybody kind of knows that who subscribes. If you have any questions, let me know. But we are looking for this to continue. There is no play here. There's no chase. Can't chase because the weekly is extended, and it's keeping the daily disorganized against the monthly. But I'd be far more concerned if these energy builds were going in the opposite directions and DI2 were falling. Now wheat's not falling; it's still below zero because it's been one that's been the laggard. It was 70% about 2 or 3 weeks ago, and then that caused a sharp rally above 7, and we've drifted a little bit lower since then. We'll see if it comes back to accumulate again. In terms of the Pro Index, which is over here, you can click these links here and you can get these charts. We can see that the Pro Index has, this is the professional buying, this is the public buying, and this is price. Here's corn. There's no leadership yet. As of yet, there was into the rally, but we're looking for this series to keep up and break out ahead. We just don't see it yet, so it's likely the consolidation is continuing. Soybeans is the same way, and wheat is the same way. So what really is the chance that these weekly time frames are going to reset? I'd keep my eyes, if you're interested in this part of the matrix, I'd keep my eyes closely affixed here, because this is when this goes from any of these go from up to down, it could be the opportunity, as long as there's a decent energy build, it could be the opportunity we've been waiting for to reset the entire composite trend. If the composite trend lowers its score from such high numbers, 0.81 to 0.69 for these triple ups, the next triple up that will come will be early cycle. The trend will be refreshed. The primary trends will not come down. They'll still be up, but see, they're not anywhere near as extended. They're not extended as much in price. Wheat's just at the mean. These are slightly above the mean, and the time cycles are just slightly above their normal cycles. Wheat's further along, but the other ones are much lower. We haven't even reached the mean time frame. In a powerful rally, these will go much higher than their means. They will either double or triple them up to go during that process. So I don't think we are done yet necessarily until these primary trends flip down. So as we watch these energy builds and we're waiting for this to get organized, if you keep your eye on this weekly and it goes down and it goes back up, the resets that are going to come there, and I will create a restricted content review on any of them if it does that. And we'll talk about it along the way. Again, I just want to keep this one open because I think too many people are sucked into the fundamental story that's out there, an argument, if you want to call it that, between what the crop's going to look like and what we think it's going to look like and what it's going to be. I think it's more than that. I think the lockdowns and the whole COVID and the disruptions that it's done to the entire world, and it's probably not even done doing, I do think that the food market is starting to reflect something that's even bigger than just the yield of the 2021 crops throughout the planet. I think it's starting to discount trouble ahead that is it could be weather related, it could be shipping related, or it could just be human related. There's something going on. I can see it. I think others can see it as well, but it's difficult to put into future headlines because we'll just have to wait and see what they are. If you sit there and say I'm bold enough to know what that is, people quickly discount you as being full of it. So I just stay out of that realm. I'd rather have them watch the discipline, these numbers, the energy builds, see what the invisible hand's doing, see how the time frames are moving and realigning. And when they go and are ready to go, if you're sitting on the sidelines thinking, well, there's a bearish argument because that's what everyone else is, I wouldn't stand with them. I would stand alone and follow the invisible hand. It happens all the time. And one of the recent one we've been talking about, and I'll have to do an individual review on, is coffee. And I can tell you coffee's not done either, which tells me that there's something not only wrong with the fundamental story, but also the distribution story that is encapsulating all foodstuffs across the planet. So really, this is the setup for corn, soybeans, and wheat. It's moving, and I would characterize it as cost building or consolidation, and it just keeps lingering. But this one, we're having well-defined energy builds within it. So keep your eye on that in the coming weeks. And if you haven't had a chance to read the blog, go back and do that. And if you haven't had a chance to subscribe to the Matrix, let me know. If you're a past subscriber and you've been here before and you're looking to come back again, you contact me. And we'll talk. I mean, I remember everyone who's subscribed over the years, and there's plenty of them. If I Most of this stuff is done through the computer, and I know that people learn to read the computer rather than to talk to me necessarily. But it doesn't hurt to have a conversation with some others on the internet, whether it be Twitter or even inside the blog or Facebook. I'm not a huge fan of those platforms, but they do serve a purpose if the conversation's constructive. So keep in mind, watch this close. Enjoy your time and free time this weekend. Enjoy the nice weather. This conversation's not over, and it's probably going to intensify as the weeks pass and we approach into the fall. So thanks for watching the video, and stop by if you can.